RAM Ratings expects headline inflation to stay at 2.5% this year, though higher gas prices could have an impact on the cost of food. The rating agency says food inflation could accelerate this year on the back of stronger consumption and the potential spillover effects from the upward revision of gas tariffs. Durable goods inflation may also rise in tandem with improved purchasing power, as more consumers buy items like appliances, home and office furnishings, and cars. Transport inflation, however, is not likely to repeat last year's double-digit growth trajectory, which was due to the low base effect from fuel prices. On the OPR, RAM Rating says the central bank is likely to keep the rate at 3.25%, though it doesn't completely rule out a hike if the economy expands more than expected and inflationary risk increases. Kenanga Research is expecting local newspapers to hike cover prices amid rising operating costs and a subdued ADEX outlook. This is after Media Chinese International announced it was increasing its flagship newspaper Sinchu Daily's cover price by 20 cents or about 15% effective March 1st, the first time it's increasing prices after 13 years. Kenanga says the group also plans to raise the cover price of its remaining newspapers, such as China Press and Nanyang Xiangpao, a move that could see other publishers following suit. The research house is neutral on the news, saying the price hike could be offset by the potential lower circulation volume. It's keeping its FY18-FY19 earnings estimates for the group pending an upcoming result review. Target price still 35 cents, though it's upgraded the stock to market perform. Media Chinese International ended the day up 2.7% at 38.5 cents. Quiet day for the markets, but the local composite still managed to close 1% higher today. The FBM KLCI closed at 1,857 points as investors took cue from the US market, which had its best weekly performance in 5 years. Meanwhile, Brent crude bounced back to above $65 per barrel, which helped to fuel trading interest in oil and gas counters. MIDF's head of research, Muhammad Reza Abdul Rahman, says expectations of good quarterly results announcements will likely play a huge part in market movements in the near term. Geopolitical concerns are rather muted for now, with the focus on the ongoing Winter Olympics and also the progress on Brexit negotiations. Heng Yuan Refining Company was the top gainer today, up RM1.98 to RM15.02. Apex Healthcare was the biggest loser, down 18 cents to RM5.01. Minda Global made a lukewarm debut on Bursa today, down half a cent to 21.5 cents at the opening bell. The company, which took over the listed status of loss-making Asia Met Education Group, delayed its debut last Thursday. It closed at 20.5 cents, down from Asia Met's last traded price of 22 cents. Minda Global said today it's planning to focus on re-energizing its business strategy and implementing a more prudent financial management over the next 12 to 18 months. The education group serves over 5,000 students from over 35 countries. It's looking at developing new programs to expand its study disciplines and improve growth in student intake. The group owns Cyberjaya University College of Medical Sciences and Asia Metropolitan University, among others. Industrial materials and equipment supplier Panza says it is in the stage of formalizing some contracts, though it's yet to officially bag any jobs. Panza said this in response to an unusual market activity query it received last Thursday from Bursa Malaysia after the counter saw over 5 million shares changing hands. That's over 14 times its 200-day average of almost 350,000 shares. It also hit a 15-year high of 18 cents before settling at 79 cents. Panza said today it is not aware of reasons for active trading of its shares. It says it is currently in the stage of bidding, discussion, negotiating and evaluating some contracts, but it has yet to receive a letter of award. The company says it will make the necessary announcements if and when the projects are awarded. Panza closed 1.3% higher today at 80 cents.